Kia ora, my name's Jared Kerr, Chief Economist of the mighty Kiwibank, and I'm joined by Peter Hunt, known as the Huntsman. He's our Head of Trading at Kiwibank. A lot's happened in financial markets in the last few months. We've seen equity markets rallying hard, we've seen interest rates rising in wholesale markets, we've seen currencies bouncing all over the place. Peter, what's going on?
Yeah, thanks JK for having me along today. I mean, it's been a really interesting year for financial markets if we look back, post the recovery post-COVID, and I think the main theme is the recovery has been a lot better than we were expecting in the depths of March, April, and we're seeing that reflected in those strong equity markets and the high yields and the higher sort of currencies, those growth currencies like the Kiwi dollar.
So what's happening in New Zealand financial markets?
Yeah, look, I think if we just look back in the Kiwi markets, probably the last month has been a really interesting one where the Reserve Bank of New Zealand, with the talk of negative rates, the market had really bought into that scenario. So we'd seen a sort of the market had priced in an aggregate sort of a terminal rate of minus 22 basis points just a month ago. So as of today, that's at plus 15. So now the market doesn't believe that rates will go negative, or the market view in aggregate is taking that view. So that's been a big swing from a negative 22 to a plus 15, or basically 37 basis points higher in wholesale interest rates.
So when you look at a currency, I've been taught, you look at one interest rate versus another. If our interest rates are moving at a higher rate than others, what's happening to the Kiwi dollar?
Yeah, that's exactly what's driving the Kiwi at the moment. So the Kiwi Aussie is up quite considerably over that last month, and we're at basically 95.5 right now, which is the high we've been at this year. So, and that's really driven by that change in interest rate differential. In fact, the Kiwi's higher pretty much across the board. So we're at a 30-month high against the US dollar, 70.5. We're 10, 12-month highs against the euro and sterling. So Kiwis, although it's been a very weak US dollar environment, the Kiwi's outperforming in this environment.
So basically we're looking a whole lot better than many countries around the world. So investors are piling in, buying Kiwi dollars.
That's exactly right. And I think, what'll be interesting is that if that continues on, and I suppose that's where, your view on what the RB will end up doing, or is going to become critical. So we haven't, they haven't ruled out negative rates, have they? So I'd be interested to see how that pans out next year.
Yeah, exactly. I'm going to put you on the spot. I want to know your Kiwi US forecast for this time next year.
Wow.
And I'll write it in stone.
Okay. I think probably higher. I think the momentum is for a higher Kiwi at the moment, and we've seen that. So I suspect a higher Kiwi, 70.5 maybe. We'll chuck 10% on that. We'll say 77s. How's that?
Wow, high. That's it from us. It's an interesting year ahead, and we do think there's light at the end of the tunnel. We do think that there is momentum in what we're seeing overseas, and we do think financial markets, you heard it here, will probably end the year next year better than where they end this year. Thanks for joining us.